Now, we have a top Wall Street guy with us this morning. He's not been on the show before, so he's kind of an auditioning for us.
No pressure.
I've got a lot of nerve, Hans. I'm going to be nice, I promise. His name is Hans Olsen. He's Stifel Nicholas's Global Head of Strategy. Is that correct, sir?
That's right. And not a member of the Norwegian Olympic team.
You know, I told our audience I was going to ask you why the Germans so good at the luge, but you're a Norwegian, so
I have no idea.
I have no idea. All right, is the worst over on Wall Street?
What a difference a week makes. I think this is the pause, Stuart. The good news here is that the economy appears to have achieved the escape velocity that we've been talking about for years that it needed to. So what that means is that the organic activity in the economy is good enough so that some inflation pressures are beginning to build, money is moving, and the challenge to that is you start to pivot from a low interest rate environment where you have quantitative easing to an environment where you have these inflation pressures, you have quantitative tightening, and the market now has to figure out what is the appropriate multiple to put on earnings, even though they're growing, in the face of higher...
I mean, is the worst over? Are we going to go down some more and challenge those lows around 23,000? Or are we pausing, plateauing, and maybe going up some more?
So if past is prologue, what we'll see is things get quiet, sort of smooth out for a bit. There'll be another round of really good economic news, which will start to push the bond market around, which will then follow through to stocks, and then we'll have another bout of volatility in the stock market as well as the bond market.
So, someone like me, I'm in my late 60s. I've done very well owning Microsoft for many years. I've done really, really well. Should I sell any part of it?
No, you shouldn't. So you should look at this as, yes.
And that would be true of our other viewers out there who are invested now. You'll say, don't sell, because we might go up a bit more.
So what I'm saying is that you should look at this as a portfolio construction problem, not a market timing problem. So typically, when we've been through these periods in the past, and we have, 1994 was a great case in point, you had a very volatile year that was tough for both the equity and the fixed income markets. Once you got through that reset, that interest rate reset, 95, 96, 97 were pretty good years for the market.
They were,
yes. But you had to get through that reset, which is essentially what we are in the early stages of right now.
So we don't know how high interest rates are going to go. And until we find out, we don't really know whether the market's going to respond favorably or otherwise.
Well, it'll probably respond unfavorably because it's so very new, right? There's an entire generation of people in this business who have known only one thing: falling or very low interest rates. Imagine a person a decade into their career having to deal with an interest rate that is positive in real terms.
It's true.
Complete novelty.
There's a generation out there that's never known prosperity, or that feeling of prosperity.
Well, there you go.
Tell me about Bitcoin. Put it on the screen, please, because I think we're back at $10,000 a coin. Yes, we are, at $10,135. I noticed that it's gone up recently as the market's gone up, and it was down as the market went down. Is there a relationship?
Well, I think there is, and there's also a relationship with the bond market, right? When you start to have a price of money, you have an opportunity cost. Bitcoin, I think there are three things that people need to be thinking about with Bitcoin. Number one, as a currency, it's nowhere near big enough, right? It's 350 billion when it was the value of the total stock.
Well, it's not a medium of exchange.
Well, it's not a medium of exchange, but if it were, then the second problem is this. On the first one, that 350 billion is essentially the market cap of J&J. That's not a currency, right? Okay. Number two, what if you regulate it? The appeal is that it's unregulated. Well, what if it's going to be a true currency? It's going to be regulated. Buy something $10,000 or more, you're going to have to do a currency report like the banks do. So what's it worth then? And then the third thing, that if you ignore the other two and then you still embrace it as sort of an alternative to gold, you have to ask the question, what's the marginal cost of production? Because it should trade in some relationship to its marginal cost of production.
And it doesn't.
It trades at a multiple, I think, based on the last calculations, of its marginal cost of production.
I am reading between the lines, and you, sir, wouldn't touch it with a 10-foot pole.
I think there's so many more interesting ways to lose money.
That's very good. All right, sir, we appreciate you being with us, Hans Olsen. Thank you, sir. Appreciate it.